This podcast is for informational and educational purposes only. It is not tax, legal, or investment advice. Every entrepreneur situation is different, so be sure to consult with your own professionals before making any financial decisions.
Then where you're putting your money. So are you putting it in a bank where it's doing nothing? Are you putting it in the stock market where, hey, you could gain a lot of money, but you could also lose a lot of money? That's all that people really talk about is stock market or just put it in the bank. Index protects your principal, so you cannot lose money in the stock market or when like the market crashes. So market gains 12%, you get that 12%. Market loses 38%, you just stay where you're at. Market gains 12%, you get that 12% also. So that's what I love about it is you don't need to wait for the market to recover to where it was. Any gain, you will get it.
You're listening to the Money Doctor, Money Talk for Modern Entrepreneurs podcast. And I'm your host and founder, Mildred Dillon, CPA, also known as your financial physician, because I'm all about the right mix of financial diet and financial exercise. And specifically on this podcast, I'm giving you strategies, tips, things you can do right at home to achieve that mission. Ready to get to work? Let's go. Okay, for this episode, we're going to be talking about investing. And I'm going to be sharing some personal experiences that I've had, not so much with just bad investments, which, trust me, I can attest to some of those before I learned what we're going to talk about on this episode. But before we do that, a little bit of housekeeping. We just finished the big April deadline for most of the taxpayers out there, for personal returns especially, but some corporate returns. If you look at anything that I share in my messaging on social media or in videos, you will see I'm a big fan of extensions for entrepreneurs. Probably my most recent episodes, you've heard me really, as I say, beat a dead horse. Well, if you're one of those people who ignored me and you filed anyway for different reasons, it could be that you were really ready to go. And hey, I say, get this behind you. You're going to see why that's an advantage when we talk about this investing conversation. So you were ready to go, get it behind you. It doesn't get any easier to squeeze it into our schedules is what I mean. And let's face it, seasons are changing, our interests are changing. And this is the time of year that people are going to be doing those extra things with their money or need their money to help them do them. Of course, we're talking about summer vacations, school being out, and just all the fun things that we work for, right? Hopefully we're doing that. So just got past that deadline. I have to be honest, I'm still in tax mode though as I record this because I do help nonprofits. So we're still dealing with a deadline in mid-May. And for folks I filed extensions for, I'm inviting them all to get the taxes still behind them if we can get it done by the end of May. So just a word, if you're one of those people you got caught off guard, hopefully you at least filed the extension. But for sure, if you didn't file an extension, you are not entitled to that extra time to file. So reach out to me so you can catch this wave of at least putting a plan in place. Because again, it doesn't get easier and it won't get less expensive if you have a tax liability out there. So there's that. But again, if you filed your return, there's some distinct advantages to that because for starters, you now know where you stand. If you had a tax bill, you hopefully paid it or you're on a payment plan to pay it. And that is definitely an option for you. So if you get one of those notices that even they changed your return, something got reported that you didn't know about, you know, all the stuff I've been talking about, they a lot of times will just adjust it for you. They meaning the IRS, not speaking for states, but some of them will do it too if you've got state income tax. They'll just go ahead and make the adjustment, send you a letter and say, hey, this is what you should have filed. And if you agree with this, sign here and this is what you owe. Sometimes they're going to send notices with questions. Again, that's what we don't want. That's why we want to take extra time. But don't ignore the notice. It could be something so simple. Like I'll tell you a big one, the healthcare marketplace insurance, that form 1095A. A lot of people for different reasons don't get it or they missed one for health coverage. And so that has to be part of your return if you're getting those tax credits. So that's a common one. And then, of course, just 1099s, again, that got reported that you didn't know about, or just even W-2s, believe it or not, people don't know about, or they're just not remembering, because people do have multiple jobs, even if it's for a few months. Get that W-2 out there. So lots of things can trigger notices coming in the mail, but don't ignore them. I'll tell you one thing that really helped one of my clients, because they weren't sure, I wasn't sure, what have y'all paid? What do I need to send in with the extension? And so I had them pull a tax account transcript. So that's available to you also. Just go to irs.gov and fill out whatever you need to fill out. You may have an account already. If you don't, they'll help you set one up. But just look at your tax account, just overall. Now, you've got different types of transcripts. You've got the tax return transcript. So that shows you returns that have been filed. Look, even if they filed for you, IRS does do that. Substitute for return, meaning we just haven't gotten anything from you. We're going to go ahead and just create a return based on what we have file for you. So these are the things that just don't make sense in a lot of cases if you listen to a podcast like this, to let that happen, because a lot of times you're leaving money on the table when they do that. So this is your money. You're entitled to it. Let's get your money back if you are. So that's the tax conversation. Okay. I'm going to move on from taxes. Money can come into your hands, whether it be from a refund or some unexpected windfall. The question is, do you know what to do with it? Ideally, you can go right into investing. But if you're at the beginning stages with your money, or you've got some things to clear up, you need to still build that emergency fund. Maybe you've already started investing. I'll explain that later, because you've started a side hustle or a business. That's going to make a big difference in how you should use that extra money over and above what you typically bring in. Obviously, we know we need to make as much as we can, save as much of what we're making as we can, because it's not how much you make, it's how much you keep, right? Then you keep track of all of it, especially your spending, because that's where the deductions are. Well, that's what we teach anyway. It's called a Money RX. If you're doing those three things, make it, save it, keep track of all of it. Now you're ready to take what's left over and put it to work, grow it, invest. And that's what we're talking about here. When this money comes into your hands, extra money, if you've done a really good job of doing that, holding on to your own money, keeping track of what you spend, and you've got this unexpected windfall, I'll ask you again, do you know what to do with it? Can I make a suggestion? My approach is, it depends on how you earn your income. For example, someone who's going to work, hopefully can continue to go to a job, sit at their desk, and you know your money's coming, and it's on autopilot as long as you keep showing up. Someone's already planned the work. They've put the resources in place for your work. They've provided the desk. They've done all the things that we have to do for ourselves as entrepreneurs. They've done that for you. So hopefully you keep going to that, and that money keeps coming. And so, yeah, you can afford for money to just passively come out of your paycheck before you get it, because you know the money's coming, right? Or hopefully it's going to keep coming. And then hopefully you've got reserves in case the worst happens, right? So you've got that emergency fund. You can just continue to keep going. You have these things in place. For us as entrepreneurs, our cash flow, it's unpredictable. There's ups and downs. Modern entrepreneurs with families, solopreneurs, I'm in that category. We are a unique group, business owners, who we have chosen, whether you looked at it this way or not, to invest in us by running a business that we can control. Really, when you're investing in the stock market, you're still investing in a business. It's just one that you don't control, one that you hope, fingers crossed over here as I say that, you hope they're doing the right thing with your money, but you don't know. Look at what's happening right now with big companies laying people off. So you don't know what's going on in these boardrooms, but I'll tell you what I know, because I do financial statements for a living. Quarterly reports are due. And so every quarter they have to put out financial statements, and it's not looking good for a lot of big companies, because they have a lot of fat, number one, a lot of just corporate waste, like government waste. And they're having to really get creative because there's so much just inventory sitting on shelves. It's nuts what I saw Christmas Eve. Yes, I'll wait to the last minute every year, typically, to deal with that. And I'm walking the shelves. I was so stunned, I had to just pull out my phone and start videoing. Like, are you kidding me? Look at the selection. There's no way in the world I should have this kind of selection waiting till the day before. But I saw it for Easter. I'm seeing it. And so, yeah, I'm looking at all this a little differently because I know is money sitting in that inventory. And some of it goes bad, perishable. Okay, so they'll never get that money because they didn't make the sale. And so when you start talking about financial statements, that's where you see the real hit of that. Public companies who have stockholders, okay, again, you could be one of them if you own the stock. They have a duty to be profitable and keep your stock price as high as possible. So what does that mean? Well, we got to cut costs somewhere. Guess where they're cutting? People. It's the easiest, quickest place to do it, especially with technology. Sounds heartless, doesn't it? It's real people's lives. The methodology that I grew up in, growing up in a family business, we just choose to take the risk with us versus I'm trusting you to do better with my money than I can do. Think about it, because that's what you're saying. I got extra money. Let me give it to you versus what this investing for us as entrepreneurs looks like, reinvesting in my business. So I'll tell you, it's a scary time. Literally, the email said, don't come into work unless you hear from us to come in. So you picture if they're not like us, where they're creating their own income and they're in control of what their Monday, Tuesday, Wednesday, Thursday, Friday mornings look like. These are advantages that we have. Also, a lot of responsibility comes with that, obviously. That's why I guess I have a podcast talking about it and all of our issues and challenges that we face. But that's the benefit. So the biggest thing, though, is to save, then you invest. Save, then you want your extra, not to just sit in savings, because you've saved, you've got that cushion. And I like cushions for entrepreneurs. For myself, I like to see a cushion before we start putting money out there that we may not get back. When you get to step 4, investing, now we're talking about risk. You can make a lot of money, but you could lose it too. And we don't want to lose our hard-earned savings, or for small businesses, our hard-earned profits. We don't want to lose ground because we're doing the bigger thing of investing, which is putting our money to work. I want to switch gears for a little bit for this last few minutes. This whole investing conversation really lights a fire in me for several reasons. Back when COVID hit, so we're talking 2020, I got 3 licenses I never talk about. The Series 6, the Series 63, and the 65. 2 years later, I walked away from all those licenses. They have since expired. It was so hard to walk away from those licenses, but getting them gave me the inside look at the industry. Because I had those licenses, I was privy to information that you would not believe. A Series 65 license for me, it just pulled all my years of working with clients together. Preparing for that license as an investment advisor, they're typically going to be fee-based. That's 65. They make money when you make money. It's not about selling you products and stuff. So it really did align more with how I already work. Because keep in mind, I know my why, right? The reason for me doing this at all was to help entrepreneurs, help business owners. And I'm not saying you don't have great financial advisors out there. You might. A lot of them are just, they're not for entrepreneurs at all. Bad advice. Even prior years, people want me to refer them to an advisor, and I just didn't have anyone I was comfortable with who I knew would do like you see me do on this podcast. Start from the beginning. Lay the foundation. Get the questions answered before you make recommendations. Get to know them. Nurture that relationship. See, that's how we work. That's how I work. That's the culture of my whole organization. But I wasn't seeing that. So For years, I just wouldn't refer any people out to investment advisors because I didn't have that comfort level after being burned a time or two. You refer the wrong people, you're just not going to do it again. So years had gone on, 17, 18, then I start the journey in 19, and then 20, I get the licenses, and then 22, I walk away from the licenses. Why am I saying all of this? I'm saying all this to say I've done the work. I have the receipts to make the strong statements that I'm making right now. That if you're an entrepreneur and you have an advisor telling you to lock up your money in 401ks, IRAs, SEPs, you need a new advisor, because entrepreneurship, we're not trying to lose money. I told somebody if it's $5, we want to go back and see that $5. Now, hopefully it's $5.50. I'm being really silly, but I do teach kids, so I know how to make it basic and plain. But we know what it takes to make that money. We know what it took to make that particular money. The last thing we want to do is go back and it's gone. But that's what you're doing. You're subjecting your profits to the market. And everybody knows that feeling. A lot of business owners going through it right now. So what's the alternative? End up leaving money in the bank. You would be amazed. Hundreds of thousands of dollars is not even insured sitting in banks. Why? Because at least the odds are greater that money's going to be there. It's ridiculous, right? But that's why we do that. That's why I see it all the time. But that's the first thing. And then here's the other problem with these traditional plans. The whole purpose for my being is to help you pay less taxes. Unless you need to pay more taxes because you're trying to get a loan. But we've talked about that. That's not what this episode is about. But in general, we're trying to take our tax savings or take our taxes and reinvest them in our business. Here's the problem. Not only are you looking at not being able to put enough of your profits into these plans because they have limitations, you go put it into a plan that you're going to have to pay tax again. So this is pure profit. We paid the tax bill. You filed again April 15th on time, or whenever the deadline was for you. You paid on time. This is your extra now. You've already paid the taxes. These plans down the line, you get taxed later on that. These traditional plans, it's tax deferred, tax deferred. You're going to be taxed down the line. Mutual funds, you're getting taxed twice. So, no. If that's their strategy, you need to keep shopping. As a matter of fact, you don't need to shop because I have a team in place. That's why I'm devoting this whole podcast episode. We've got the team, a recorded family financial workshop. Now, this is because I believe in involving the kids. It's summertime. You can hire your kids. That's a tax strategy. So we're going to touch on that really quickly. But you go to the website, go to that specific blog that I'm doing on investing, and you'll see the link. You'll be able to register for it. I'll tell you another reason a lot of people are really scared as they watch just this market up and down, and even the analysts. I listen to a lot of the commentary and they can't explain what's going on. Look at what's happening with interest rates. No one knows anything anymore, yet we're supposed to just watch our values disappear. That's the advice, literally. Do you really want Congress and the government, and the IRS, by the way, which is the government, determining how much of your own money you get to keep once you get it out tax deferred? Why you think they keep changing the age? They're already changing the rules on people. They're changing the rules. You can say, I'm getting a little passionate. I'm going to dial it back. I hate to say I don't have a dog in this hunt. I do have a dog in this hunt because of all that I've done. That's why I laid that foundation to let you know I've worked hard to learn what I've learned, but also see what I've seen. And this podcast is going a little long because I want you to hear Justin. I want you to meet him here. These are going to be clips of him just dropping some nuggets. Going to be a little quiet and then you'll hear the next thing. But I want you to hear some of what we're going to be doing in that recorded webinar.
And they get to 65 or whatever age they want to retire, and they're like, shoot, I don't have enough money. Because they were invested in something like this for so long, that it just feels bottomless, that they'll never get out of this. We can help those families as well, but yeah, we want them to understand, like, hey, just being invested is not enough. You have to be invested in the right vehicle. Understanding that, how interest can work in favor and against you. And then where you're putting your money. So are you putting it in a bank where it's doing nothing? Are you putting it in the stock market where, hey, you could gain a lot of money, but you could also lose a lot of money? That's all that people really talk about, is stock market or just put it in the bank. So index protects your principal, so you cannot lose money in the stock market or when like the market crashes. So market gains 12%, you get that 12%. Market loses 38%, You just stay where you're at. Market gains 12%. You get that 12% also. So that's what I love about it, is you don't need to wait for the market to recover to where it was. Any gain, you will get it.
Let me tell you a story. Literally, because again, me getting these licenses gave me a look behind the veil, as I call it. I was able to go behind the curtain. I was invited into the inner sanctum. I was going in with very targeted questions in these interviews. And I asked the questions, the very things that I'm saying right now. What do you have for entrepreneurs? I understand all the traditional things, but I said, okay, so what about business owners though, who need liquidity, because we do, with our money, the extra that we have left over. Because keep in mind, I now know, this was after I met Justin. I'm not going to name companies on here. This was a big one. And she was a big marketing manager of 20 different offices she manages. She was a big person because the goal was for us to do seminars. She reached out to me. Oh, you're a CPA. You understand these strategies. I'd love for us to do some talks together. Well, after this, we never talked. Either one of us. We didn't reach out after this conversation. But this is what I asked her because I knew what to ask. See, when you know what to ask, you ask. And she's like, well, we don't really do those plans. I said, well, but hold on. Not everybody wants to put their money in the market, especially entrepreneurs, especially my clients. I couldn't even advise them to do that. We need to have funding. We need to be our own bank. We need to have a source of our own funding that we can tap into if we need it, or just to take advantage of investments. Well, we don't really get into that because our philosophy is if you just ride it out, I can't even remember all the foolishness. But let me just say, just talking points that you hear it all the time. Just wait. The market always recovers. And this is what really floored me when she said this. I said, but do you realize people are freaked out right now? The market, and it's up and down even now. She says, I lost $400,000 just this year. In my plan, you don't see me pulling it out. And I said, really? She says, yeah, but I trust the market. It's going to come back. Now, here's what you need to know about this person. Number one, she was on payroll. Think about what I just said. She was on payroll. That's why she's saying that. And guess what? She probably, in her position, because this particular company I interviewed with, I remember what they told me you get if you stay with them for a while. She owns stock. So she has a lot of moving parts working for her to watch that kind of value drop in a year and be okay. Tell me that with a straight face. I said, yeah, but what about people who they didn't meet you years ago and they didn't have the benefit of all your wisdom for you to really help them put this in place so they could benefit like you? She said, well, they should have, I don't know, people shouldn't feel that way. Like she had nothing. Do you hear what I'm telling you? And if you try it out yourself, they will have nothing for you. They don't want to sell those plans. They don't want to offer those solutions because they don't get paid from these solutions. You've heard assets under management. Look it up. Her paycheck, her bonuses, her anything else they're doing is based on the amount of money that they have from people like you and me, or whoever wants to put their money in there. It wouldn't be me. They get paid based on assets under management. So the more money we're quote unquote holding, sitting, we're in charge of, the higher my check. That's how this is structured for a lot of these companies. So in her case, she doesn't get paid to give you an alternative where she's not in control of your assets, meaning your money, because, you know, cash, money is an asset. She doesn't get paid from that. And so a lot of them are not even going to bring it up. And so once I learned this knowledge, I tested it out. She was just one. There was a few. They're at a loss. They keep going back to this, well, we can put it in a plan and we're just going to watch what it goes and we'll diversify and we'll do all these fancy things, which is great. But you're still subjected to market loss. You can make a lot of money, but you can lose it too. How we do it over here, you're not losing. You're only gaining, okay? And we structure those plans to do just that. And you have access to your money. And when you access that money, we did the tax deductions earlier to get to that point, but now you're accessing the money tax-free.
For small business owners, most of them are not utilizing tax code IRC 162.
Big words.
Yeah, keywords. That is an amazing tax strategy. Not only isn't it for you and your future, it's also a tax write-off for your business, and it gives you tax-free funding for your future. We have amazing strategies for real estate investors and agents. I was talking to a real estate agent, and she's like, yeah, in our business, we got to pay like 40% in taxes on my LLC. That's insane. If we help you set up this strategy, we could drop that down to like 18%, which is huge.
I'm so excited. Isn't that awesome? Can you believe that exists? You know, the only thing I could say is I wish I would have known this before I went through all that studying. Where were you guys my whole life? Turns out in Frisco, Texas. But if I hadn't gone through that, I wouldn't have the confidence that we're doing the right thing for business owners now. And I did promise you we were going to talk about investing, but guess what? That's investing too. We're talking about investing in us. I'm close to getting some ads. So that's reinvesting. Okay. That's me with the extra profits I have now putting it back into the business. And can I just tell you, those things become write-offs. When you put in the stock market, business owners, there's not a lot of deductions we can do with something like that. And you got to wait. And yeah, we know you deduct losses and offset gains and stuff like that. But that's not the real nitty gritty of how you pay less tax. Real talk. So that's why we prefer the more direct investing that way. But hey, there's nothing wrong with having multiple diversified investments. Okay. So you reach that point where, yeah, why not put a little money into some bigger companies who are doing bigger things than you are? Why not? But that's why I'm doing a lot of education this month, meaning the month of April, right now as I speak on my website. I've got a blog up, which is all about smart investing for entrepreneurs. When you go there, you will see I'm going through just some do's and don'ts and things to watch out for as an entrepreneur investing. But when you talk about having your funds in the market and they're just disappearing and you're just freaked out by that, you don't need to be. I want you to know, and I'm hoping that you'll share this with a friend and really get the word out that there's another way. Okay, there's some other options for you. You don't have to just lose all your money in the market, but you can still make a lot more than you would in a bank, of course. You can do these things, but if you don't know, you won't do it. So I know I went a little long on this one, but I think it deserved it. What do you think? As I wrap up this episode, let me just give you an idea of what's to come. For May is Mental Health Awareness Month, right? So what stresses people out more than their money? And I tell you, watching your hard-earned savings, hard-earned retirement disappear, that's stress on top of stress right there. That's what we're going to be focusing on, Mental Health Awareness Month. And so right after that, let's keep this going and get the kids involved. Get the kids active at home and touching money. And I'm a believer in it's really hard to learn how to manage money if you never have any to manage, okay? So we're showing parents how to put money into their, not just little kids, but even young adults and into early college years. They need to learn this too. And then some of that will definitely probably spill over into June. And then July, we're going to go heavy into other people's money, capital. So you definitely want to make sure you subscribe to this podcast because I'll probably be doing some stuff in between the main podcast, just some bonus episodes, just so we can fit it all in. Check out the blog at yourmoneydr.com. If you ever want to send a message, though, you can always find me on social media, yourmoneydr, all the platforms. And if you really enjoyed these episodes, would you please leave me a review just to know how this is helping you. I just appreciate you so much. Mildred Dillon, CPA, saying make it a great day, especially for your money and your investing strategies and your family. And we'll see you next episode.